Alright, so now let us have a look at the Japanese candlesticks anatomy. How exactly is the Japanese candlestick is created? Let's look at the basic structure. Okay, so on this chart you will notice that there is a black candle, there is a white candle, and there is a candle which is very small like this. Okay, so there are three types of candles. One is the bull candle, then you have the bear candle, and then you have the doji candle. So on a bull candle, as we discussed before, the prices are going up. On the bear candle, the prices are going down, and on the doji candle, the market is flat because it doesn't have any color. Okay, now what's happening on the bull candle? So let's consider this. This is a this is a candle for a day. For example, let's say on Monday the market opens. Let's say this is the opening price. Let's say the market opens at 100. Okay, then during the day the bears push the prices down and push it till 80. So that's the lowest price for that day. And then the bulls, first the bears were pushing the price down from 100 to 80. Then the bulls come into the market, they start pushing the price up and take it to 150. Okay, and then by the time the day closes, the bears again push the price down and close it at 130. So these are approximate numbers. So what this candle is saying is that on that day, on Monday, the market opened at 100, closed at 130. However, the low of the day was 80 and the high of the day was 150. This is all there is. So this candle is just a summary of entire day's worth of price action. So a candle is nothing but a combination of open, high, low and close. And this rectangular portion is called as the real body. The distance between high and the close for a bull candle is called as the upper shadow. This is also called upper wick, and this is the lower wick or the lower shadow, the distance between open and the low. Okay, understand that there is heavy market activity at opening and closing. So when the market opens, there are a lot of people who want to get into the market, so they want to buy. And at the same time, there are a lot of market participants who want to immediately get out of the market once the market opens, because maybe they want to book profits or maybe they see opportunity somewhere else. On the closing also, there are some market participants who are saying that before the market closes, I want to get out of the market. And there are other participants saying that before the market closes, I want to get into the market. So there is a lot of market activity at open and close. So that's the bull candle for you. Now this is we discussed for a daily candle. Okay, this can be a weekly candle, this can be a monthly candle, this can be a 1 hour candle, a 10-minute candle, 15-minute candle, 1 minute candle, 4 hour candle. It can be any time frame that you choose. Depending on the time frame you choose, the shape of the entire chart will be different, because you are changing the time frame of that candle. But understand that whatever candlesticks knowledge or patterns we are going to be discussing are applicable to all time frames. Okay, so that is the concept of universality, where candlesticks are so universal, they can be used on any asset class, stocks, commodities, currencies. They are also universal in a sense that they can be used on any time frame, from monthly going down till 1 minute chart. You can use the candlesticks. Moreover, candlesticks are also universal in a sense that you can use them on any instrument. Like if you want to trade cash market, you can use candlesticks. If you want to trade futures, you do candlesticks. If you want to trade options, even there candlesticks are going to be helpful for you. So that's the bull candle. It's very easy. It's just open, high, low and close. Okay, the rectangular portion is the real body, then you have the upper shadow and you have the lower shadow. Understand that the lower shadow represents bullishness and the upper shadow represents bearishness, because for the upper shadow the bears have been successful in pushing the price down. On the lower shadow, the bulls have been successful in pushing the price up. So the lower shadow is created by the bulls and the upper shadow is created by the bears. Okay, and the real body is where the real price action is happening, because uh, it represents market opening and closing. I like the daily charts because it represents official opening and official closing. Like for example, a 15-minute chart, these are not official opening and closing prices. It can be somewhere during the day. But for opening and close for a daily time frame chart, that is the price that gets circulated in the media. That's the official opening and closing. Okay. So for a bear candle, there is nothing different. We have the real body, the upper shadow, the lower shadow. Only thing is that the opening and closing have flipped their positions. So the market opens at 130, goes to 150, goes down till 80, and then closes at 100. Okay, that's the only difference. That is why the color is different here. It's just that the opening and closing have flipped positions. Just understand that when you have a bear candle, the market prices are going down. Doji candle, as it's very obvious, it doesn't have any real body. It has long upper and lower shadows in this case. Now the opening and closing obviously are the same in this case, so that is why we say that the market is flat, or the market is confused, or the bulls and the bears are in equilibrium, or the power of the bulls is equal to the power of the bears. Now you look at this chart, now you will be able to understand how the prices have gone down. If you look at this downfall, you see 1 2 3 4 5 6 7 8 9 10 11, around 11 black candles, and how many white candles? 1 2 3 4. So you have 4 white candles and 11 black candles. That is probably the reason why the prices are going down. This is a very strong bullish candle. This is a very strong bearish candle. And also notice that within the white candle there are different shapes. So this white candle is very different from this white candle, or this black candle is very different from this black candle. So depending on the shapes of the candles, you can have multiple permutation combinations of different patterns, which is what Japanese candlesticks patterns is all about. So you can have multiple shapes of shadows, you can have multiple lengths of shadows and bodies. So depending on these lengths and shapes, we can have, or we can identify different patterns in the market, and which will give us more insights into the market. Okay.